Okay, I think we have quite a few people already online, so we can start. Thank you everyone for attending our webinar about our platform, GenTwo Pro. The idea behind this webinar was to basically demonstrate to the people how does the whole workflow from launching a new product to going through the approval process, secondary market trades, normal life cycle events, price discovery, and value determination, and how the whole product life cycle is basically serviced through our platform. I don't think that we have put enough emphasis on this so far as GenTwo. So the idea was to basically demonstrate that to the people, right? Very briefly today, we will go through, first of all, very briefly, the GenTwo business, right? Just to highlight that, for which asset classes this is relevant, et cetera, et cetera. Then we would follow kind of the natural route, the natural role, natural events, basically, when somebody would like to launch a product, right? So we go from the product launch. We would review some of the most important steps that somebody has to fill in when a new product is created. Then following that, we will go to the briefly AML KYC of, in this particular case, a trader for the product. Obviously, this process is more or less the same for all the counterparties related to a new product. Then we will move on to the issuance process, the approval process, then the standard live page of each product on our platform, where you see the pricing, you have all the documents, etc., etc. We will continue with the secondary market orders and how are they, how does it work basically when somebody has an AMC live out there? How is he able to be informed about new orders, and at the same time, how does the approval process work? And finally, a quick overview to sum it up, and then we'll go to Q&A. So with regards to questions, as always, please make your notes, and at the end of the session, we will open the floor, the virtual floor, for questions, and I will be very happy to receive your comments, right? So having said that, I believe it's quite known what asset classes we're basically involved with. Nevertheless, we thought it makes sense to do a quick refresh, right? So what we will discuss about today, what we'll see today, is relevant for any product. So it could be a product from the middle category in this slide, so the public market. That is the most common one for most asset managers, wealth managers, etc., right? Typically, liquid strategy, we have a trading account for the AMC. There we have equities, bonds, structured products, etc. That's about 40–45% of our current business. On the left side, we have the private markets, also a very big focus for us here in GenTwo. So that is another actually 40–45% of the business. So these are the two main pillars. I find it extraordinary that we are able to launch products on private assets, either illiquid funds or direct private equity, direct private debt, basket of loans, or a basket of VC companies, real estate, art, collectibles, etc. Virtually everything that can be associated with a certain valuation could qualify to be an underlying in one of our products. So all this is also possible to be launched and managed through the platform. And as well, the digital products, right, on cryptocurrencies and other digital assets. Also, as a very quick reminder, with regards to the jurisdictions that these assets are usually located. So we have been active in both funds, equity and debt, private equity, private debt, in more or less the biggest part of the world where there are mature capital markets, right? And we keep expanding. So it's not that just because we are based in Switzerland, our business is purely Swiss, right? As you can see, actually, I believe the United States is the most common location of a large part of some parts of the business, right? Now, having done this very quick intro, refresh, let's say, on for which kind of assets, for which kinds of products our platform is relevant, we would like to go through the standard platform overview, introduction, and how we're able to launch a product and manage it. So once somebody logins, and by the way, It's possible to log in also from iPhone, iPad, so there's a mobile version, and virtually the idea is that anytime, anywhere, our client is able to perform all the functions for the platform. So here, obviously, this is a demo environment, right? But normally when somebody logs in, is able to have the overview of all the products which are already live. Now, in order to launch a new product, there's a very easy button on the upper right corner, the one that says new structure request. So this button that, as you can see, is highlighted. So there, once this is clicked, it opens a menu for the, sorry, there is a bit of an issue with the presentation, I believe. So, okay, there are a couple of slides missing, but we will add them. So basically what happens is it opens a menu. In the menu, we're able to see all the information required for the product to be launched. There, I mean, here we see, for example, the page where somebody would enter the asset allocation. So for example, the asset manager would be able to say, in this AMC, we will have, 0 to 50% equities, 0 to 30% fixed income, 0 to 20% FX, and so on and so on. We can also have illiquid assets in an AMC combined with liquid assets. So we can also have a part of private equity, a part of private debt, etc. In all the products, the manager basically of the product is able to define how detailed as well he would like to be. So for example, in a certain strategy, the manager could just have a very generic description saying this strategy is long only US equity, blue chip, etc., in a single sentence, and then we have a 0 to 100% allocation on US equities. Or if that is part of the strategy and he would like to be so, let's say, detailed to his investors as well in the term sheet already, he could have 1 or 2 pages or min and max allocations geographically, per name, per currency, etc. So this is basically the decision of the manager. What is important always is that the product, once it's issued and it has a term sheet, which is the legally binding document, this term sheet or the strategy that will be implemented would be in line with what the term sheet mentions, right? That is always very, very important. Now, with regards to the additional information that is requested, the parties is something very important. So in our setup, as I believe most people know, we always use SPVs, special purpose vehicles, which are the issuers of the products, right? So typically, each of our clients would have his very own SPV, a dedicated SPV, and from that SPV, it would be possible to launch as many products as possible. Now, in various business cases, we have seen that somebody who has some own strategies would also like to enable a third party to launch a dedicated strategy, right? In this case, this is fully supported from the platform. It is, as you can see here, there are multiple roles basically for somebody to acquire, let's say. So typically we have a manager and the distributor of the product. Additionally, we can have some technical roles like product sponsor, product administrator, strategy advisor, etc. These parties can all be the same counterparty, let's say independent asset manager, or depending on the specific business case or let's say commercial agreement, it could be multiple different parties, right? So these parties it's possible to enter them in the platform, and accordingly, there could be different fees awarded to several of these parties. So here you can see some of the columns. Something which is very important as well is that the platform itself, when you launch a new product, it will adjust the menu and the questions that are being asked depending on the product type and depending on the parties involved. So for example, if somebody would like to launch an AMC, an actively managed certificate on equities, there will be a very standard menu whereby the platform would ask, about the custodian, the broker, the trading counterparty, etc., etc. Now, if somebody would do a product on private equity or private debt, obviously the platform in the menu in the different steps would ask different questions, right? Because they would be more relevant for this. And in the same manner, the choice of the parties involved in a product would show virtually a different menu for the fees that are to be awarded. Typically, a product will have upfront and or accruing fees, running fees. Upfront fees can be a simple distribution fee, whereby the manager of the product, every time there is an order, and we will come back to this, can award a distribution fee to a sub-distributor or to another counterparty, or it can be upfront fees, which are basically deducted from the product value and are amortized normally, right? So that's why it's here. Here you can see an amortization period drop down. Here we see 24 months. Obviously, this period can vary. On the recurring fees, normally we have administration fees, management fees, performance fees. The normal market conventions are applying there. So the performance fee, for example, can have a high watermark, a risk strike, etc., etc. The recurring fees normally are paid quarterly to the manager or to the relevant parties of the product, right? So there, let's say a product has 1% annual management fee. So basically there every quarter, so at the end of every quarter, the manager of the product will receive 25 basis points. This accrues daily on our system. So every day, depending on the NAV of the product, there will be a small accrued on this fee, right? And then at the end of the quarter, this will be paid out. So this is standard process. All the fees are basically hard-coded in our systems once the product is issued, and everything can be entered from the platform. So it's a very easy process and a very transparent one and clear, right? Because it's very important that the fees are always very transparent. Obviously, the fees that are mentioned here would also be on the term sheet. So the term sheet typically will have, for example, management fee 1%, performance fee 15%, and distribution fee. Distribution fee, because we all know that it depends on the specific case, on the specific sub-distributor, on the size of the order, even sometimes. The distribution fee is something that normally we would say, for example, for the specific AMC is up to 3% example. So that means that for every incoming order, the manager of the product can award distribution fee from 0 to 3%, right? Having said that, we would go quickly to the final step. So once the product, the dates, the strategy, the fees, the assets, etc., are entered in the system, we would reach the last point. Before actually somebody will click submit, it's important to mention that the work, the progress is auto-saved. So somebody doesn't have to go in one run from the first step to the last. It takes usually about 10 to 15 minutes for somebody who's familiar with the platform to launch a new product and enter all the information, right? But nevertheless, because it might be that some of the details on the strategy description, etc., will need to be clarified with some colleagues or with a client, it's not necessary to go in one go, to go in one step. So the platform would auto-save the progress for each of the steps. And then, as you can see on the left, here it says 100% progress, but this would increase, right? It would always reach 99% before the submission button, right? So once everything is entered in the platform, then the system will ask the user or client if you would like to submit it. There, as I said, there is a possibility to either save it and revisit it and potentially amend something, or click the submit button, in which case we receive the request. Even when we receive the request, obviously this is not set in stone, right? Obviously, it's important that most of the information is accurate, at least at this stage. But virtually then we kick off the process whereby the product is entered and created in our systems. Then the team will revert back with some potential additional questions or some due diligence documents if something is relevant. And then typically our client will receive an indicative term sheet, which he will still review, and it's still possible to make some changes on the strategy or the asset allocation, etc. So here, it's not the idea that somebody enters all the information in the platform and then basically whatever is there, that's going into the market. The idea is that we try to streamline as much as possible the intake of information for a new product. As you can imagine, for simple products like an AMC on equities, etc., that is a pretty straightforward process. But I would say this is extremely helpful when we're talking about more complex transactions with multiple counterparties involved in a private equity or private debt transaction, etc., etc. Now, having gone through the product launch process, we would go to the AML KYC on different stakeholders. I think myself and most of the participants were all perfectly aware how painful this process can be, right? When it comes to onboarding counterparties in different jurisdictions, etc., etc. We have invested quite some time and effort in order to simplify that and make it as efficient as possible for all the parties involved. There are multiple different templates for AML KYC on the platform. Here we see a standard one, which is for the trader of the product. So basically, once the product is launched, which party would be doing the trading on behalf of the strategy. So as you can see, typically we would require the name, address, etc., then a passport copy, utility bill, which is quite common for traders, and so on. And so exactly, basically in line with market conditions, right? This process and virtually the whole tool anyway is something which is constantly being improved. So every 2 weeks, every 2 to 3 weeks, there is a new release with new enhancements, right? So at the moment, we're already at a stage that this is actually working, right? This is working since several months now, but every few weeks, one should expect further improvements in the tool. Now, with regards to once the product is actually issued, right? So we would have, just before the issuance, the steps completed. Here you see the different counterparties. So typically we will have the manager of the product, which is usually the same with the sponsor, right? We have the issuer, of course, issuer being the SPV itself, the product manager, the manager of the product, and platform advisor, which is basically the advisor of the SPV. So all these steps are basically audited in our platform. And the idea is that, first of all, we and all the people involved which are connected to the platform do not basically waste time for everyone. Everybody's always aware where, at which step the product is lying and what is the next action to be taken. And of course, for our client, it's a transparent way while being in the issuance process to know at any given moment where exactly the process is. Now, with that slide, we have covered the whole product launch and issuance process, right? So we will go to how does it look when the product is actually live. So we have this slide here. This is a typical page of a product. This is a live page, of course, for each of the products, right? Here we see all the information related to the specific product. So we have, of course, all the documentation, terms, etc. We have all the parties involved. We have the valuation of the product. The valuation, as we have discussed a few times, would depend the frequency and so on, would depend on the type of the product, right? So if it's a liquid product, normally it's daily. If it's private equity and so on, it could be monthly, quarterly, annually, annual and so on. We see the number of outstanding certificates. We see the valuation of each certificate. So virtually here, our client will be able to have the full information. What you actually don't see in this slide, but we had to zoom not to make it very small. What you don't see is that you would also be able to be aware of all the life cycle events. If there are any scheduled coupons, fees, etc., everything will be part of this page. And once again, the idea is that from here, our client is able to have the full info on the product, which is why you can zoom into the pricing diagram. You can download the pricing of the product. The whole daily pricing can be extracted and used for reports or any client communication. And as well, something which I think I would probably reveal already is we're working in order to have also the exact fee calculation of the management fees, etc., into the same menu, right? So the idea is that our client is able to have all the information which is relevant for the product by just visiting the specific page of one product. Now, as we know, a typical structured product has several, let's say, milestones in its lifetime. So first is the subscription open. Then subscriptions are collected, we have the subscription close, and subsequently we have the issue date, right? So after the issue date, we would normally go into, so we have the primary market before, after we have the secondary market, and of course we have the secondary market trading possibility. So our platform supports as well the secondary market activity. Of course, virtually how it works is that, let's say our client has 2-3 AMCs live. When an investor is through his bank making a subscription or a secondary market top-up, then our client would always receive an email, a notification, and in the notification would actually see what you see here, the last order on the bottom. So on the very right, you see two little buttons, a tick which stands for accept, and the next which stands for reject. So ultimately, every time there is an order, either an increase or decrease, our client will have the option to accept or reject a specific order, thus being completely on top of the liquidity of each one of the products, right? As a quick reminder, each trade has a size which usually we would use as minimum just $10,000, Swiss francs, etc., with increments of 1, 11, 12, etc. And then on top, for each order that comes in, there is a small comment box that one would see if you would click on the trade, and in there it's possible to enter a distribution fee. So the idea is that our client has an AMC. The AMC says distribution fee up to, for example, 3%, and then for each of the orders, it's possible to enter a distribution fee that can be 10 basis points, 20, etc., up to 3%. Once the comment is entered for the distribution fee and the button, the accept button is clicked, then basically the custodian bank of the investor and the bank, basically the book runner that we have appointed on behalf of the certificate, will settle. We do the pre-matching, and then they will settle DVP, delivery versus payment. Typically, that is 2 business days after the trade, right, as for every structure note. And then basically the distribution fee that has been entered would be taken into account for the settlement price of the specific note. So everything is part of the system. Our client doesn't need to, calculate something or does do any kind of manual step for that process, and will of course be informed once the order is accepted, and then subsequently at the settlement date he will be able to see the inflow or outflow actually of cash in the cash account of the product, right? So all is facilitated basically through the platform. Now, with regards to the overview, we are at the moment at about 2.9 billion in terms of assets across all the products in dollar. We have been enjoying a pretty steep growth over the last 3 years. I believe we have communicated that last year alone, 2022, we were able to add approximately 1 billion, 1.1 billion into the products across all asset classes. And as we all know, last year was a particularly easy year for the financial markets. At the moment, the focus is to further expand the offering and strengthen all the processes and services around that. So we are thrilled to be able to be at this position, and we hope that our offering is more and more relevant for more and more counterparties out there in Switzerland, which is still the majority of our clients, but as well abroad. Having said that, we'll be very happy to go into the Q&A session. So I believe we can open for questions, and we're happy to take them. So let's see what comes in. Usually takes a couple of minutes until the questions start popping up. Maybe just the first question, and something which is quite relevant actually. In case that we have a broker or a multifamily office or a structure whereby a manager is working with several other parties and would like to basically get a dedicated SPV and then basically enable third parties to launch strategies, the way we operate is that we're able to create separate logins for each of these parties. So let's say we have a manager that has 2 own strategies and then 2 other third parties that they would like to launch 1 strategy each, so 4 in total. So each one of the 2 additional managers can receive a dedicated login that they can only see and manage their own strategy. So all that is supported through the platform already. A very good question. What is the usual timeline for the launch of the product? So it depends vastly on the type of the product and the assets underneath. Assuming we're talking about a standard AMC on equities or something like that. So typically we're talking about probably something like 3-4 weeks, depending on the bank that will be chosen, right? Because the bank would also need to open an account. If we're talking about a private markets direct investment, let's say, especially if it's a bit of a more, let's say, exotic country, I would say something like 5 to 6 weeks normally. Of course, this would have to be communicated and discussed when the product is launched, especially given that there are quite a few third parties involved, depending on the case, right? Question, is it possible to access a demo version? This is actually a question we get quite often. At the moment, it's not supported technically, but what we can offer is that we can basically jump on a call and then we can do kind of a live demonstration, right? So we can go through the different buttons, through the different menus, to the different functionalities, and that would as well be kind of a demo setup, right? Demo version. Do we have funds or examples of funds or VC funds that have already worked with us? Also, do funds typically work with local or multiple distributors? So we have, in terms of number of products, we have crossed 1,000 mark, right? And as I mentioned before, I would say something like 40-45% of those are private market products, including the illiquid, at least, funds. So that gives you some idea, right? So we have more than 400 products on illiquid or private markets. So we have a lot of funds as well, especially given that some of the products are not focused on one fund, but might have 3, 4, 5, 10 funds as underlines, right? So we have worked with several of the main fund providers out there. If there's some question about a specific one, happy to basically inform you have worked already, or if not, I mean, we would still do the standard onboarding process, right? That's something we have done tens, if not hundreds of times, so that shouldn't be an issue. Now, with regard to the distributors, basically it's a mix, right? Our clients can be family offices, brokers, wealth managers, independent advisors, banks. So as you can imagine, some of those guys have their own distribution network, others work with sub-distributors, etc. With regards to a question on interactive brokers, yes, that is something that we have almost integrated in the platform, right? We have more than, I believe, 110 or so AMCs with interactive brokers. So this is absolutely a vanilla case for us, right? That will be, actually, it's the simplest possible setup, a bankable liquid AMC with interactive brokers as the execution provider, right? With regards to the private markets, question is, do you have restrictions on the type of investments in the private equity sector? Virtually, short answer would be no. Nevertheless, we will need to do AML KYC onboarding of, so if let's say somebody would come with a specific private company that is to receive financing, either via equity or debt, we will do a standard due diligence check just to make sure that everything is intact. So we wouldn't go basically into the commercial details of the project, but it is our duty, as it is also the duty of the bank, the paying agent will open an account, etc., to make sure that we have performed the standard due diligence, right? So besides that, we should be able to have the asset into the product. Going on, are the fees for the paying agent included in our fees, or are they going to be separate? That's actually a pretty technical question already, if we're talking about the paying agent. So for everybody's maybe memory refreshment, the paying agent is a technical role. It's gonna be the counterparty that manages basically the cash account of the product. So each product has at least a cash account, right? Might also have a trading account and so on and so on. So typically the paying agent costs are included in our offering. There are some very specific cases that there might be a small additional comment, a small additional charge, but typically they're all included, right? In case, again, so if you have something more specific in mind, I will be very, very happy to have a more specific discussion, right? Can the platform be white labeled? Answer is of course. Typically, what we say to our clients is that we as GenTwo, we don't need to be even mentioned, let's say, in your interaction with your clients and your investors. So we are basically acting in the background. The SPVs are all standalone legal entities, right? They don't belong to GenTwo, which is why that our clients and their investors are also not exposed to the credit quality of GenTwo, right? It's all standalone legal entities running by themselves. So the product virtually is the product of our client, right? And everything around that is white labeled. Our client can have his own documentation, his own marketing material when he interacts with his investors. So yes, everything basically is white labeled, right? One last question maybe for this session. What about the costs? So the cost, our cost structure is having two components. Normally, there is a small upfront cost in order to set everything up and running, and then there is an annual recurring cost on the assets. Both actually depend quite a bit on the type and size of the assets, not just per product, but also for the sum of the whole SPV, right? Typically, we would not have a minimum size. So let's say if somebody comes and says, okay, I would like to launch a new strategy and I would start with 500K or 1 million or 2, we will not reject that order. But nevertheless, we will have our standard cost framework basically applying, right? There, we have our kind of a catalog pricing normally, right? But obviously, this is tailored to our client. So if there is a question about a specific, let's say, offer or bid for a specific project, I will be very happy to have a discussion in the course of the next few days to see what would make sense, more or less. So having said that, I would like to thank everybody who joined us in this webinar. I hope that it was, there are some clear takeaways from what functionalities the platform has and what can be possible through that. Our contact details are quite spread out, I would say, from the website, here in the slide deck, etc. This meeting is recorded, so as usual, we would circulate as well the recording and the presentation to the interested parties. And if anything else, I'll be very, very happy to follow up at the second manner. So thank you all. Wishing you a fantastic afternoon. Looking forward to the next session, which will be on private markets. Thank you. Wishing everybody a fantastic day. Bye-bye.